Good morning everyone, welcome back to my channel. It's King Bash. I'm getting ready to go to my trading station to give you guys a chart breakdown. If this is your first time, subscribe so that YouTube will recommend this channel. Alright, I am set to go. Subscribe, like and share to support this channel. I appreciate you all. Peace out. Welcome back everyone. Today we are going to do a detailed breakdown from the higher time frame down to the lower time to entry time frame. This is all you need to be profitable as a trader, even a beginner trader. If you listen attentively, this will make an immense impact in your trading career in general. If this is the first time you are joining us, I am King Bash. I'm an experienced trader that have been in the market for over 4 years. I've been in this market since 2020, I think 2019, early 2020. So I think I've accumulated enough experience to share to you on the market. So I've understand the way the market is moving for a very long time. I've seen this repeating every day continuously for a while, year in, year out. So if this is the first time you are joining us, please try to endeavor to subscribe, like and share so that YouTube will recommend this channel to others, and it will also help many people looking for this knowledge, struggling traders. So all right, without wasting much of your time, let's go. This is GBP USD. We are going to break down GBP USD, and you will be able to see opportunities that you will have taken today and yesterday. There are opportunities, but if you can't properly interpret the market, then it becomes difficult for you to see opportunities like this. All my explanation will be based on the ICT concept. So I'm using the ICT concept, including market structure and price action. So listen attentively as we begin. Okay, this is GBP USD. This is the weekly time frame. So now you can see from the weekly time frame, from here we can see the price have been going up bullish, making higher highs, higher lows. That is how the market move: higher highs, higher lows, higher highs, higher lows, higher highs. So this is what we call an uptrend in market. The market doesn't move straight like this, one candle, single candles. It moves in waves. So now when you see the structure of the market from this point here, you can see the market is going up. So what some people do is they plot a trend line to show them how the market is moving, but you don't really need to plot any trend line. From the way you see the market, you can see price is going higher, making higher highs and higher lows. These are signifies a bullish trend market from the weekly time frame. But immediately price reach this level here, you can see the last higher high and higher low. You can see from the last higher low here, price broke it down, price came down. So this is what we call a market structure shift or change of character. We call this the market structure shift. So now once you see this from the weekly time frame, this is telling you that now price is about to start going down. This is the first time that signifies the trend is changing. So now, since the trend is changing, what happens? You are now looking for what sells now, but price is has now dropped down to this level. Price made a very massive drop, 1 2 3 4 5 6 7 8 for good 8, that is 2 months. Price have been dropping, making series of red candles respecting each other's highs. So this is a powerful confirmation to you that price have been dropping for a while. So now it's time for price to do what we call retracement, because I told you price moves in what waves. It will not continue moving like this. So price is about to retrace. So now, where are areas that do we think the price will come to? Now you see from here, there are many things that draw price. We have liquidity, we have imbalances that are like magnets from the ICT or fair value gap. They are like magnet, they draw price. So also some demand and supply zone, they also attract. These are areas where orders are placed. So when you see an imbalance, these are areas or a liquidity or a high. And I've explained liquidity for you, and if you want to know more on that, you can write it in the comment section. And also you can see the imbalance here. I've explained imbalance also, so if you want a detailed explanation also, I can do a video on that. So now we've seen price break down to this level. Now price is about to start retracing. So where are areas that we think price will come? Now from here we can see price, this last green candle, we call it the bullish breaker. This is the bearish big breaker block. You can see from here price from here, price starts dropping from here. You can see price move up and start breaking down. So this is an area where price can retrace back to. Price can retrace back here before going down, because we are now experiencing what, from the weekly time frame, bearishness. So when price, we're expecting price to come to this level before it continues going down. But this is a weekly time frame, so in lower time frame, it will not be, it may not be the same, because this is a bullish time frame. So price have to reach here. So in smaller time frame like the daily, the 4 hour, the 1 hour, what you see is a bullish trend. So price will be making higher highs, higher lows down to this level, up to this level. So also you can also see here there is an imbalance here between this candle and this candle. We call it a fair value gap imbalance from the ICT. For those of you that have studied the ICT, you are used to it. For the intermediate and experienced trader, and for the beginners, if you want more on imbalance and fair value, I can do a video on that. So here is also an area where price can come to. This imbalance here between this this is a magnet in the market, so price will come towards this place now. So you can see also, and I also informed you that price liquidity are found in weekly highs and weekly lows. So the highs of these candles are areas of liquidity. These candles you see, they are all areas of liquidity. Price have already swept this red candle here. Here there is a liquidity here. Price has swept it, showing us that price is about to start going up. So you can see, so the next area, this is the first area we want, the high of this big red candle here. So we want price to reach here. After price has taken this candle, price we target this. You can see double equal highs here. This is also an area of strong liquidity where orders are placed. Price will eventually come here, and you see this is also our what, our bearish breaker block. So from here price can come down here, sweep this high down to this imbalance here and drop down, or price can even go down and fill this entire imbalance to this supply zone here. That is this point here, this candle, the supply candle. So around this region, this is where we are expecting price to come to, from this point down like this. So from here price will come to this point this box before we start looking, expecting to see any sign of what bearishness to continue. This is the weekly time frame. Now let's go to the daily time frame. Now on the daily time frame, you can see on the daily time frame, you can see this price has been created equal higher lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Then price drop down here. From here, this equal highs here, price drop down to this point. So now immediately price drop down to this. I created a low and a lower high and lower low, so you know the trend is still going down. Immediately price break here, you can see from the weekly the same thing. Price has broken and closed above this lower high, this previous high. This is the first sign to show you that now price is about to start retracing. So retracing to which point? To this block we marked here, this angle, this box here. You can see this is where we expect price to move down here, but immediately price broke here. This is what we call a market structure shift. It's a sign that market is about to what? Start shifting, changing its position. Now you can see from this point here, exactly. So you see, after price broke this zone here, this high here, price close above it. So what happened? The same thing happens. You see, all price retrace back to you now start. Price will first of all retrace back after making this high here. Price will retrace before continuing its move. Like what I told on the weekly time frame, there are things that attract or draw price, like the fair value gap or the imbalance. We say liquidity areas. These are draw price. So when price makes this high, we expect price to retrace back to an area of interest before continuing its move outside upward. So you can see from the daily time frame, the change is telling you that now price is about to go bullish from breaking this zone here. Well, in the weekly, it is what? Bearish, and we're waiting for retracement. You see two things aligned. We're expecting retracement because of the massive drop on the weekly. Then on the daily, it is showing us now sign of what? Retracement. So you can see here we have another fair value gap that attract price. This is an area where price reach before price starts going up. You can see this is an imbalance. I told you it's a magnet. Price eventually can fill it halfway or completely before moving up. You see, then also we have this our bullish breaker here. We have our bullish breaker here, this box here. This last green candle here is our bullish breaker. Then also here, this candles here, these green candles here, these are daily lows. Also there is liquidity there, so price will take them, come down here, fill the what? Imbalance before start moving. So from this point here, this is another box here on the daily time frame. So price came here to this imbalance before price start moving, and now price has made another high here. You see, comes higher than this. So now we expect price to retrace back down here to continue it what? Push to the upside. So from this point here, price has dropped down. You can see price broke this high also. You can see now this is the recent high. Price broke this high now. That's good. So you can see price broke this high, and what happened? You can see these candles, there's a slight gap here. So price came down here, filled this imbalance. You can see this drop here, this candle is acting like what? A demand zone. So price came here below this candle, this daily candle. There's liquidity here. Price takes the liquidity and start moving up. You can see from the candles. So also there is an imbalance here a little. Price came here, fill it, and price start moving. This is the daily. From the daily now we can see that price is going up. It's making what? Higher highs and higher lows. Now when you go to the 4-hour time frame, you come to the 4-hour time frame. Now you can see this is an area where price has reached. After making this high, price comes down to this. You can see high, low, price made a high, and price is coming back to this what? Low. Here you can see this down candles here. This is a strong supply zone on the 4-hour time frame. You see a strong supply zone on the 4-hour time frame. So price comes back down here and price continue moving. So from here, this is on the what? On the 9th of December. So this is how you could have entered the trade. Immediately price starts retracing. You come the next day, you saw this red candle. After this red candle closes here, you can see immediately the red candles drop, touch this supply zone, this candle, it closes above the candle with a rejection, a slight rejection. So you can see that his price is about to start moving. So from this point, this is how you enter this trade. Now what do? You now go to your 1-hour time frame. Now you can see this is our 1-hour time frame. This is our 1-hour time frame. From this point, you can see price is reaching. Price closed like with this candle, and so we are expecting a push to the upside. So now from the 1-hour time frame, you can see this area. Price came down here. This was the lowest low price has reached on this day. That is on the 5th. Throughout this day is 1 day. So price made this low. This will serve as what? A liquidity at daily lows. You can see. So price, after sweeping this liquidity, price move, and price will target what? The next liquidity here. That's the high. So what happened? Price came back down here. Price swept this low. You can see this daily low. You can see this is what we call, this is also a liquidity area. So after price has taken this low here, you see immediately. So from here, it is another confirmation, because price has taken liquidity. Price is now in 4-hour demand zone and also 1 hour, and price has retreated to an imbalance on the daily time frame. So you can see from here, now you will start looking for your entry. So entry can be on the 15-minute. You go to the 15-minute and look for your entry. If you cannot see the entry, you see on the 15-minute is just giving rejections. So you can go down to the 5-minute. To the 5-minute, you can see on the 5-minute. On the 5-minute, you can see here price repeats the same thing. I told you the market is fractal. It repeats the same thing. Price is making lower lows, lower highs. That's downtrend. Then from this point here, the last lower high, price made a lower low here. You can see. Then from here, price broke structure on the 5-minute time. It broke this structure here and broke the next one. You can see this high here. Immediately you see this break here down on the 5-minute. The same thing with the daily. Price is about to start going what? Up. So before price go up, immediately price break here and not this high here. Price, you now mark your areas of interest where you think price will come. Number one, we have the fair value gap here, where I told you price repeat the same thing. You can see we saw this in what? The weekly time frame, the same on the daily time frame before price started changing its direction. And now on the 5-minute time frame, you are saying the same thing. This is your entry time frame. So immediately price comes down here to this imbalance, and you see this rejection, this candle close above it. This is where you start entering. And now you see this is number one confluence, number one break of structure, and a close, full body close. We have an imbalance here. Then we have here, this is what we call a bullish breaker. This last green candle before price dropped. Also this zone here, you can see. So from this breaker block down here, this is where you are supposed to what put this is an area, where from this box here down here, this is an area where you are going to be looking for your what entry. From your entry, we have imbalance, we have bullish breaker, down we have this demand zone here, this box here, this red candle. Then from here, price can tap here, most especially the imbalance, and start moving. So once you see price taps here and close above this imbalance here, this is where you start looking for what you place your buy here. You place your buy, your stop loss will be below here. And what do? You now target the next area of what liquidity, that is session highs, session low. You can see from here, when you enter from here, price move up down to this is the first area of liquidity. This is Asian session, this is the high of Asian session. So from here down here, you could have made 1 to 5 risks to reward. So after this, where is the next area? Then you target the next high. This is the overall high we are targeting. So this is how you break down your chart, and this it repeats every day. So if you find value in this video, please do well to subscribe, like, and share this video so that YouTube will recommend this channel to others that find it difficult to find an edge in the market. The market is simple, it's repetitive. All you need is your risk management on point, understand the movement of the market, the structure of the market, and what drives the market every day. And most especially time plays a significant role. So you make sure that each time you're looking for a setup, you should look for it when there is volume in the market. It also increases your win rates. All right, thank you so much. If you are still listening down to this ending of this video, thank you so much. Please like, subscribe, and share this video to others. Thank you so much.